Well, one name that has been grabbing headlines over the weekend is Silicon Valley Bank, the collapse of which has caused tremors throughout the world, affecting investor sentiment world over. Now, SVB was the 16th largest lender in the US before its shutdown, and in fact, its collapse is considered as the biggest bank failure since the Washington Mutual incident. The collapse of this bank has actually had a profound impact on the tech industry, as it was a major financier of tech startups. Fed's aggressive interest rate hikes did see an impact coming in on the startup world as well, and the bank's ability to meet withdrawal demands was hampered by high interest rates, which had limited financial conditions. So what has unraveled over the last few days? Let's understand that. On March 8th, we had Silicon Valley Bank selling about $21 billion of its securities from its portfolio, and that was at a lower price. The very next day, the bank announced that they had sold all the available for sale securities in its portfolio, and in fact came ahead and updated its forecast for the year, and that included a sharper decline in NII, that is the net interest income. After which we saw that the shares of the bank plunged by nearly 41% in intraday trade, and that is in fact the biggest single day decline that the bank registered since 1998. On March 10th, we had venture capitalists advise portfolio businesses to withdraw their money from SVB, and on account of a sharp sell-off that was seen in pre-trade, shares of SVB were actually halted from trading. California regulator on the very same day shut down the bank and appointed FDIC as the receiver. Now, FDIC is the Federal Deposit Insurance Corporation. Now, given all these factors, we did see that major banks saw a sharp decline last week. We saw the likes of JP Morgan, Wells Fargo, Bank of America as well as Citigroup decline anywhere between 7 to 12%. First Republic Bank also registered a fall of nearly 34%, while PacWest declined by over 55% last week. We also had financial regulators stepping in order to control the situation. They rolled out emergency measures. They were also ensuring that depositors would have access to all of their money on Monday morning. They also went and further announced and assured investors that no losses associated with the resolution of Silicon Valley Bank would be borne by the taxpayer. Apart from that, we also have an emergency Fed meeting that is scheduled today. The US Federal Reserve is expected to hold a closed-door emergency meeting on Monday, wherein the Fed will review and determine the advance and discounts rates that are to be charged during the meeting. The FDIC and Fed are also considering creating a fund that would allow regulators to backstop more deposits at banks that run into trouble. Now, the focus of this meeting would be to reassure depositors as well as contain any panic. Now, what is the impact of all of this on India, you wonder? Well, data sourced from queries sent to Tracxn actually indicate that nearly 20 investments were made by SVB in India, and those include Paytm. However, shortly after, Vijay Shekhar Sharma came ahead and said that SVB was not a current shareholder. Now, without Paytm, the cumulative investments stand at around $1.1 billion for the company. Startups like ChargeBee, Postman, CleverTap, Freshworks, among many others, have been banking with SVB. And when we look at Nazara Technology and its entities, they have a total exposure of nearly $7.75 billion in SVB. So what lies ahead for all these startups, you wonder? Well, no new recent funding round by SVB has taken place, and the fundings were of a lower ticket size as well. Now, most software as a service companies, that is SaaS companies with significant operations in US, do have some credit lines with SVB, and there could be an impact as US VCs have asked founders to actually withdraw funds and limit their exposures to SVB. What are some of the members in the ecosystem also saying about this? Well, VCs are saying that there is enough dry powder in Indian accounts for investments. The government of India is also stepping in, and they're also saying that they will be meeting up with startups this week in order to understand the impact of the SVB crisis. The Fed is also making available additional funding to eligible depository institutions, and obviously, like we mentioned before, the emergency meeting is scheduled to happen today. The UK PM has also reassured by saying that no contagion risk is expected due to the SVB crisis. So overall, when we look at its impact on India and its startups, we will have to wait for further developments in order to ascertain the actual impact.
If you like this video, then like, share and subscribe to ET Now.